Hey guys, All in Crypto here and welcome back ladies and gentlemen for another YouTube video. I hope you've all had a fantastic week so far. Today guys, we're going to be jumping into Cardano and I'm going to be doing something interesting with you in this video. I'm going to be sharing with you and going over again why I believe we are in for a $7.50 to $10 Cardano price, potentially by the end of the year. We're going to be essentially wiping the charts. We're going to be looking at a nice clean chart and we're going to be mapping out Elliott wave theory on it and kind of showing you not only that the Elliott wave theory is definitely present here, which gives us reason to think that it's going to continue and complete its kind of 5-wave structure, but that you're actually in for quite a good year. What I want to do to start with, guys, is take a look at Cardano on the more immediate time frame. If you're not already subscribed to me on Twitter, guys, head over to @RealAllInCrypto and give me a sub because you'll get some more timely updates. Yesterday we said that new all-time highs were coming for Cardano. We did indeed get them. You'll get some more. We've made a lot of accurate calls on here. So head over there and give me a follow if you're not already for some more timely updates. And I am going to keep you up to date with the situation that is currently taking place on Cardano. We did indeed see new all-time highs, but we have sold off since then. I happen to believe that this is rather healthy. And in actual fact, it's quite a key trait of, we said you had a bit of a falling wedge here. If we look at this kind of macro falling wedge that we had previously, and we look at what happened when you broke it, guys, and I'll move this out of the way. Can you see what happened? You had this kind of break before coming back to retest, before you then see continuation. This is a very, very common trait that you see when you break resistance levels. Often you'll come back to retest them as support before you see continuation. So this is nothing to worry about. Very, very bullish on Cardano, and that's what this video is really all about. I want to show you how we get to that $7.50 to $10 price range. So please pay attention. You're going to learn a thing or two if you're new to charting and stuff like that. So let's dive straight into it. So you guys know that we have an Elliott wave theory mapped out. On here we have got the Alonzo hard forks, etc., and we have our kind of mini Elliott wave theory within it. What I want to do is go over that with you guys today. We've got a clean chart here. We're also going to look at a number of things like the RSI, the volume, the EMAs, and how they kind of cross, and you get these bullish crosses on your next leg. There are so many factors, so many data points that suggest you are in an Elliott wave theory structure. And what that would suggest is you still have that fifth and final wave to come. So pay attention, guys. Before I start that very, very quickly, I want to just also show you, this is the total money in crypto. This is a very important schematic that I overlaid in yesterday's video because this is what's to come, guys. Can you see the similarities between what happened over here and what happened here today? Now this of course was the crash of March 2020. We all know what happened there. It was a bit of a black swan event. But you're setting up the same structure. Many people were bearish here. We are actually bullish. This is by the way, this is on a logarithmic scale for the total money in crypto. Just makes it a lot easier. It's a lot easier to map out. So you had this thing here. You had this sell-off here. You come up, you climb your way out, and you don't quite break all-time highs, which have people saying, look, this could just be a dead cat bounce before we go lower. But in actual fact, you go on to continue. And these sell-offs are very comparable in a lot of ways. And I ultimately think you're in for a pretty spectacular year, much the same as over here we've got 2017. It wasn't really till the end of September when things got really crazy. It's way more accurately highlighted off the logarithmic scale. So let's get into why we have that $7.50 to $10 price range for Cardano and why I actually believe that that's very achievable and where you are today in retrospect with where you're going. Now let's quickly spend a second talking about Elliott wave theory. Elliott wave theory was essentially created by a man called Ralph Elliott, and he came up with the idea that markets move in a wave-like structure where you have impulsive waves, then retractive waves, and you move in this kind of Elliott wave structure. And I'm going to show you that that's absolutely apparent today and gives me reason to believe that we're going to complete this. We're going to see that fifth and perhaps final wave of this bull run. I'm going to make a video after this one talking about, are we going into a bear market in 2022? Lots of people are predicting that based on the Bitcoin 4-year cycle theory. It's a big question that I get asked. Should we sell? And we're going to talk about it in another video. But for this one, let's focus on Cardano and how we get to $7.50 to $10. So this is Elliott wave theory, and Elliott wave theory dictates that you move in a 5-wave structure. You have essentially 3 impulsive waves and 5 retractive waves. before you then enter an ABC correction, much the same that we had in 2017. So you'd have had your Elliott wave theory here for most alts, an A, B, C correction before you then start your cycle over again. And what we're going to do, guys, is we're going to map out these Elliott wave theories on the chart. Now, there's lots of individuals out there who will actually map this out as your one wave and this is your two wave. I happen to not subscribe to that. I happen to believe that this is your one wave, the kind of March 2020 crash. This is your two wave. This is your three wave. And this is your fourth wave. And we are now embarking on potentially our fifth and final wave, which I believe is going to take us towards the $10 range, around about $7.50 to $10. And I actually think that that could coincide in this year into early next year if the kind of Bitcoin 4-year cycle theory holds up and we don't have some kind of an extended bull run. But for now, guys, we're not going to focus on that. We're going to focus on the fact that I believe we're in an Elliott wave theory structure. And within your Elliott wave theory, your kind of macro Elliott wave theory, you have these micro Elliott wave theories playing out, if you will. And you can see that these are apparent. Can you see how you've kind of got a three-wave impulse, 1, 2, 3. And in actual fact, this is probably better highlighted on the weekly because you can see these impulses more clearly. Can you see this here, guys? 1, 2, 3. And I'm actually going to map these out and actually change the color of them in just a moment. So 1, 2, 3, 4, 5. Before, and let's change the color. What color should we go for? Let's go for orange. A nice Bitcoin orange. Before you then enter, where's the A, B, C? Your A, let's draw it there, B, and then you got your C. And let's make that a little bit thicker because we all like a bit of thickness. And let's put that in orange as well. Now you can't really see the ABC correction very well on the weekly chart, but you can see it a lot more clearly on the daily. This is, bear in mind, guys, this is just me roughly working out. I am going to do a video where I kind of go into it with a little bit more detail. And then you start your next wave. So once your Elliott wave theory is essentially completed within your 1 and 2 wave, you'll then start your 3 and 4 wave. It moves in these kind of structures, if you will. So if we go ahead and we go back to 1, 2, 3, let's switch us to a weekly so we can map these out a little bit more accurately because they're kind of more apparent, they're more prominent, if you will, on a weekly time frame. Now this is quite a hard one to map out. Essentially, this is how I'd draw it. So you start with the bottom, your 1 wave, your 2 wave. I would say this was actually your 3 wave, and we'll talk about why that is. Your 4th wave, sorry, your bear with me 1 second, guys. Let me do that again. So your 1 wave, 2 wave, 3 wave, 4 wave, and your 5th wave. Before you then enter, and we'll switch back to the daily for this, your A, B, C correction. So your A, B, C correction. So we'll go ahead and draw that on. Remember, this isn't an exact science. What I'm really trying to show you and highlight for you, hopefully here, guys, is that your Elliott wave theory is absolutely in play here, guys. A, B, C correction, something like that. I mean, it doesn't have to be exact. You could put this really anywhere, but there are rules to Elliott wave theory, and the kind of rules to Elliott wave theory is that, so for example, your 4 wave can't come to your 1 wave, can't come below your 1 wave. You can come right up to it, but if it goes below your 1 wave, your whole structure is out the window because then you've invalidated that structure. And much the same in the kind of smaller waves. And like I say, remember, this is just a roughly mapped out kind of guide for you, if you will, just to show you that it's present and why I believe you've still got a lot more upside to come. Much the same as we overlaid this schematic on the total 2. And it's one reason, we've said for a long time that we think this year is going to end in a 2017 to you know, 2013 kind of ending. You know, this bull run's going to end in a similar fashion. So you can see you've got your smaller Elliott wave theories. Now, where are you today? So I ultimately believe that you're potentially on your fifth and perhaps final wave of this cycle. And I actually believe that you've only just started your one wave going perhaps into your two wave. And we're going to talk about why it is that I believe this. So let's get this back up again. You've got your one wave. You've got your two wave that we could have actually completed. We're going to talk about something in just a second, guys. Let me just get a little bit more real estate on the charts here. This is just rough. There's no way of me being able to accurately predict where these kind of end up. But this is how I think. This is how I'm kind of looking at things and going. You have Elliott wave structure here. It's played out so far. We'll know if it doesn't play out, guys, or essentially your fourth wave would have come below your one wave, and you can see your fourth wave was well above it, and it's all kind of playing out very, very accurately today. Now let me talk to you a little bit about Elliott wave theory. In traditional Elliott wave theory, so in your stocks, things like that, your third wave is the biggest wave. Your one wave is typically your smallest, and your fifth wave will come somewhere in between your one and your third wave. In the commodities market, however, your fifth wave is often bigger than your third wave. So the crypto space, I think there's a little bit more similarity to perhaps the commodities market in a number of ways. But not only that, if you look at how we end a bull run, the gains really, if we go back to our total money in the crypto space, the gains really come towards the end of the year. This is when you had your most kind of parabolic growth. This is September, and this is what you made. And before that, I mean, yes, you did very, very well, but it wasn't really to the end of the year that things got rocking and rolling. And I'm expecting a parabolic run towards the end of the year. So I actually think your fifth and potentially your fifth wave could actually go significantly beyond your one wave. But your one wave is always your smallest. So to give you guys and we're going to get into a number of factors that also validate, before I give you this kind of where I suspect we're going to get to, I'm going to give you a number of factors that also validate this. And I'll do that before, actually, just to reconfirm to you guys that Elliott wave theory is absolutely at play here. Because you have a similar structure here. Each time, if you look at the waves, you have a very, very, and let's take the smaller waves off, guys, just for now, to really kind of show you what's at play. If you look at the structure here, first of all, your one to your two wave coming into your three wave. Look at the volume. You have this kind of bottoming out structure on your volume. Much the same that you had going into your one wave. You see this before you then get a kind of uptake to it. What we've currently gone through, and we've looked at this on a number of occasions, look at the volume and look at what it's doing. Ready to come back up the other side. And this is through the summer period, which markets typically go very low volume as it is. That's one confirming factor to suggest you're now on your fifth and final wave. You've also made a new all-time high. So you're not, the possibilities of an A, B, C correction are out the window because you've actually took the height of your third wave. So that's how we know that I believe there's more continuation to come for this market. Also, what I want you to note on the daily time frame is every time we have one of these bullish crosses, it always seems to come in the same place. So a bullish cross for me, you can do it with a number of different EMAs like the 21 and the 55. I'm using the 20 and the 50 EMA here, exponential moving average. Can you see this bullish cross right here, guys? Where your 50 go below your 20, and then look at what happens. You have much the same thing over here. Yes, you are all going to point out that there was a little blip here. This could just be, something happens with the markets. There's a bit of an unprompted sell-off or whatever that may be. Remember, these are lagging indicators, so they're not the be-all and end-all, but it kind of adds up. So that was your one wave, bullish cross here, three wave. Bullish cross has only just formed, guys. So you are now entering your fifth and final wave. I hope what I'm showing you guys here makes a bit more sense. I'm doing quite a longer video today to kind of really drill home to you and show that a lot of people out there are just throwing out big numbers and they're going, $20, $38, you know, $10, $5, $3. But why do they think that? And I'm trying to show you guys, and I'm going to do a video on the to also confirm what we're talking about today, guys. So look out for that with the Fibonacci's to show you that in actual fact, $7.50 to $10 could actually be underestimating where we're going to. And I'm trying to give you a conservative price. We've had this price prediction for a long time, well under a dollar. And it was very much laughed at the time, and now it's looking more and more like a reality. So you've got your bullish crosses that's just formed. So that would indicate to me that within this macro wave structure, you've just done your one wave. You're potentially entering your two wave correction, and you've got the bulk of this move to come, ladies and gentlemen. So that's the good news that I have for you in this video. Also, very quickly, I'll switch to another chart to show you what the RSI does as well within your waves. Now, this is the RSI on the daily. We could potentially use the weekly. That might be a little bit more clear for you. So this is the one that we've kind of already had drawn for you. Can you see your one wave, come down for your two wave. Three wave, come down for your fourth wave. Now you're on your fifth wave. The RSI also confirms that to us. I hope this is making sense to you guys and isn't confusing too many of you. I hope that you're kind of seeing my reasoning for all this. Now, in regards to where we are and where we're going, remember, I said your one wave's your smallish, third wave's typically the biggest, unless it's the commodities market, which can often be the fifth wave. We said cryptocurrency could actually be, I don't think you're quite going to get to your third wave, and we'll do it just as a thought experiment to show you what your third wave on top of this wave would be. Your third wave, the same size fifth wave for your third wave. But what I want to do for the most pessimistic outcome is I want to use your first wave. And I want to show you the percentage that your first wave did. And remember, typically, let's get this absolutely bang on for you guys so that you can really see. We'll just move that for just a second. Remember, this isn't an exact science. You can please go and map these out yourselves. Do a little bit of research into Elliott wave theory. It will help you tremendously in your trading. Let's actually, oh, here we go. Let's move this as well to kind of show you what's what. So we come right to the bottom of this sell-off. And we come right the way up. Let's get this absolutely perfectly for you guys. You can see you've got nearly 900% here. I want to get this just right for you so that you can see I'm not throwing any punches here. So from the bottom of this sell-off to the top is around about 900%. This move here, so if we put these back in place, I'll move this so I can get the bottom. The very bottom's here. Let's actually get a bit more real estate on here. Was around about 3,000%. So I'm not suggesting that's going to happen, but let's take your one wave, which is the most pessimistic outcome that we could have. And let's add from here 900%. That gives you a $9.88 Cardano price. And if this is a true Elliott wave theory structure and it's followed it to date, your fifth wave typically will be bigger than your one wave. You can see this here. You can see it within the microwaves. This is what we're potentially looking at, guys. This is why, despite other people being very bearish at the current moment, we've remained bullish, even if a sell-off is at play. And I also want to talk to you very quickly to show you something else, a trait that goes on with Elliott wave theory, to do with your EMAs. Your 20 EMA acts as support the whole way on your upward waves. So if we think we're just here, you come up, you come to your EMA before springboarding off it. Look at this as well, guys. You come up, you come to your EMA before springboarding off it. We haven't yet, and it could just be because of the momentum that we currently have behind the market with the Alonso hard fork, etc., etc. We haven't yet come up, come down to test it. So we could be in for a bit of a sell-off. And every time, I'm not saying we are, but I mean, we could be doing what we're doing right now, guys, and just kind of going a little bit sideways, a little bit squint. Can you see that, how we're already coming back up? Many people are messaging me going, what's happening? Please if you're an investor, just don't watch the charts every day. I could have done just fine investing 4 years ago and coming back to it today. 4 years later, I'd be very happy. A year ago, 2 years ago, 3 years ago, and there's no work involved in it. You need to be a smart investor. If you're going to be a trader, it's your job to look at these charts and find entry and exit points. But for the majority of you as investors, and that's how you will make money in the crypto space, not by trading, because most traders lose money. All these professional traders are absolutely full of it, by the way, guys. I've actually paid for professional insights, professional advice, professional trading tips, professional signals. They've largely been absolute garbage. Don't get me wrong, I found some great picks out of some of them, but the majority were horrific. Now, I'm not hating on anybody's chance to make a living, but there's the right way to make a living and the wrong way. So this is where we're at. I hope this has been an informative video for you. I hope you found this useful and helpful, and I hope it's given you some reasons. And we're going to do a fib video after this one. We're going to overlay the fibs. We're going to show you on each sell-off, etc., etc. Just before I go, I'm going to show you one last thing. I'm going to show you just how accurately these waves are repeating. With the bar pattern again, like I just showed you on... Now, I don't think you're going to quite do what you did in your third wave. I mean, I'll do that for you just as a thought experiment. But you do the same thing. You come up, you form this cup and handle, and then you break out. You come up, you form this cup and handle here, and then you break out. And that's where you are today, guys. And you've got a long way to go within this wave. Now, very quickly, as a thought experiment, can you see the similarity here, guys? This isn't perfect. I'll play around with it a little bit, because obviously, you know, these waves take place. Can you see this? Lower lows, you've got your falling wedge there, you break out of it. There's also falling wedges at play here as well. It's so interesting, guys. Charting, you know, somebody asked me the other day, did I go to trading school? You know, have I done this? Most professional traders have no idea what they're on about. They really don't. They're just professional at taking your money. Anybody can learn to trade. Doing it successfully or not is a completely different story. Now, I'm a swing trader at best. I'm not a micro trader, or, you know, I'm an investor first and foremost. I'm a venture investor secondly, and I'm a swing trader. I take some swing trades based on certain things. I would say I'm certainly not a professional. My background is actually in the healthcare sector, but I've been in these markets for 4 years and picked up a thing or two since I've started, and that's what I'm here to share with you guys today. I'm nobody special. But my track record hopefully is starting to speak for itself and gain a bit of credibility, and hopefully, more importantly than anything, I'm showing you guys that I'm not here to extort you. Go and check the descriptions on my video and compare them with other YouTubers. I don't have one referral link in there, guys. I make my own money. My goal isn't to make money off you. The only thing that I value, or the only thing that is a currency that you guys give me, is you guys hitting the like button, leaving a comment, subscribing to this content, and actually giving it your attention. We don't want your money. Now, I'm going to be releasing something later on at a later date in regards to a fund, but that's to come later on down the line, and you know, there's a lot that needs to go into that. But that's really where we're at today, guys. I hope that this has been useful and informative to some of you out there, to show you that, you know, this $7.50 to $10 is very possible. Now, I did say, and I keep getting sidetracked, guys, that I was going to overlay this very quickly for you. What was this? 3,000. Let's do 3,100%. Let's say it was the same size as your third wave. You're looking at a $33 Cardano price. So I think that's $1 trillion and something dollars, which I think in the future, 5, 10 years down the line, Cardano could quite easily reach $1 trillion in terms of market cap if it delivers on what it's promised. That is all I have for you in this video. I don't think that's going to happen this cycle. Watch out for are we going to go into a bear market after this year? Are we going to follow the Bitcoin 4-year cycle theory? And I haven't got the Bitcoin chart up for you guys right now. Sorry about that. But essentially, the Bitcoin 4-year cycle theory is this. It lines up with a Wall Street cheat sheet. We mapped it out for you years ago. I'll show you on the Ethereum chart. This is the Wall Street cheat sheet that I was mapping out for you. The emotions attached to markets when we used to talk about it a long time ago. But this is essentially your 4-year cycle theory. And it literally works in 4 years, and you've got the halving roundabout here, which gives a supply shock to Bitcoin, etc. I'm rambling on now, guys. I'm going to love and leave you on that note. Hope you've all found this useful, and I've given you reasons to get on TradingView. You can set up an account for free. You don't need to pay for it. Set one up for free and just play around with your Elliott wave theory. See for yourself if you think it's present. Come up with your own ideas, do your own research, and own your own outcomes. That's the most important thing about being an investor. I don't want to hear any excuses if you lose money of so-and-so told me to do that. That's your fault for listening to them. You should be confident, like in this sell-off where we came on here every single day and said you're not in a bear market. You should be absolutely confident in the investment that you're making. And if you're not, what you're doing is you're gambling. You're taking a chance on something, having not done the due diligence. Gambling and trading, gambling and investing are two different things. Gambling is completely separate from taking a calculated risk to reward decision with your money. Gambling is it's a luck game essentially. So that's all I have for you in this video, guys. I'm going to love and leave you on that note. If you're not already subscribed to me on Twitter, head over to @RealAllInCrypto. You'll get some more timely updates on there. I'm going to love and leave you on that note, guys, and I look forward to seeing each and every one of you in the next YouTube video. Thank you very much for watching, ladies and gents.